Good morning. Dornbush download number 45 closing in on the half tonne. We've got a special surprise coming up for number 50. Not even the other interviewee for number 50 knows it's that much of a surprise. But anyway, we'll keep everyone in suspense. Michael, welcome back. You're looking refreshed. Good holiday away?
Yeah, thank you, Andrew.
The groupies followed you around. Or were you able to sort of keep the location a secret? Or?
Oh no, we had a wonderful week up at Alex Heads. Actually.
Don't tell us, mate. They'll know where you go.
Had great weather, but. It always goes way too quickly, of course.
I reckon you need 3 weeks. I reckon the first week away just to try and get your bearings right. The second week you're getting into it. The third week because you don't really want to sort of come home. Yeah, 1 week is never enough. But that's great. And you were very popular. 790 emails when you came back.
Yes. Always, it's always a delight to have to plough through all of that when you get back. But the world keeps turning, doesn't it? I guess, and of course, the European scenario continues to labour on. So I was trying to sort of avoid the TV and the news, but it's just all over the place at the moment. And of course, the news is really continuing to sort of throb the Greek and the European story, and rightly so. I mean, it is big news, of course, but unfortunately, at this stage. Still no results.
And to win a bet here in the office, Greece is the word. Cue the soundtrack. It's really just, it is the ultimate Greek tragedy, and I'm not trying to sort of be Mr. Cliche, like it is just going on, and like if there's any way that they could prolong this, they're finding it. So the latest one at time of filming today, of course being Wednesday, is that the Greeks want an extra day to put forward their proposals to the Europeans, and the rumour mill is it's basically everything that the Europeans put to them before the referendum. And so everyone's going, why did they even have this referendum if that's the case? Like, it's just a joke. It's a dead set joke.
He continues to play hardball, doesn't he, Alexis Tsipras? And
is that how you say it?
I hope so. I don't want to get on Alexis's bad side, that's for sure. But it went to the people, the referendum, 61% or whatever the outcome was. So it continues to come back and forth. You're exactly right. I believe we've got another EU summit come Sunday, which is supposedly the new line in the sand. But this is the third or fourth crack they've had at this in the short term. But of course, been bubbling away now for 6 years as well, or close to. So,
and probably the key thing for investors ultimately is, is there a chance of contagion? I don't think so, and it's quite easy to tell if there is. We look at the 10-year bond yields for Spain and for Portugal and for Italy. They're sitting at around 2.5% at the moment. You spoke about this crisis has been going for 6 years. Back in 2012, when it was getting pretty serious, those bond yields were around 11%. So the lower the number, the less of a chance of the crisis. So if we see those bond yields sort of get above 3.5%, certainly we'll be on the phones to clients going, there's a problem here. But at this stage, it appears as though the European Central Bank is going to basically contain it, say to Greece with the line in the sand number 4, get out or come on board, but they basically need to do that, don't they?
Yeah, no, but it's a really good point you bring up, Andrew. The pigs, as they were sort of informally called, in much better shape, and they've been much more accommodating in sticking to the austerity measures put in by the IMF and the EU, and actually I think it's the Irish and might be the Spanish as well. Actually, have had a couple of current account surpluses in the last couple of years. So the other countries that were on the nose have improved dramatically. Their current account, their deficits have improved markedly. There's still deficits there, but in much better shape. So I think you're right. The concern at the moment is that we'll see another GFC type Eurozone meltdown. Doesn't look like it's going to develop into that at this stage.
But we're still seeing a lot of volatility. So even today, I think we're down about 50 odd. Yesterday we were up 100. The day before we were down 90. China, and we'll briefly touch on China. China's stock market down about 30% since June. Yesterday, the Chinese government basically stopped trading in 25% of Chinese companies. So they're starting to throw the kitchen sink. They haven't thrown it completely yet, but we've got to remember the Chinese economy is a command economy. So, and if the Chinese stock market falls in too much of a heap, it's really a reputational issue for the Communist Party. So I can't see them allowing it to fall into a complete heap. I think they will manage it, but the issue is we've got that blowback on commodities. I mean, iron ore was down overnight, nickel's at 6-year lows. So that's one of the reasons why we've got so much volatility in our markets at the moment.
Yes, and even just to touch on that very quickly, Andrew, I mean, if we look at the Shanghai Composite, it had risen about 120% prior to this little bit of volatility. So you could certainly argue it was, it was bubble-ish and, probably due for a well-earned breather. But yeah, the volatility only adds to the concern that investors have around, Europe and Greece and all the rest at the moment.
Absolutely. So Michael, what companies are you looking at the moment?
Yes, Andrew, we were only talking about it earlier this morning. Tassal Group, TGR, one that we've been following for a little while now in that agriculture space, into the Atlantic salmon based down there in Tasmania. They basically have now formalised the purchase of DeCosti, a distribution mob, and they've also signed up new retail agreements with Woolworths, 3-year agreement with Woolworths.
Because that was the big risk with their business, wasn't it? That Woolies and Coles wouldn't renew their contracts.
That's right, yes, and they've also now got Aldi on board as well, Aldi in Queensland and New South Wales. So good little company, it's not a big company, about a $550 million market cap, so it's on the smaller end of things. PE is certainly not demanding. The price earnings ratio, you're looking at around about 12.5 times. Dividend yield's pretty good, about 4.5%. And it's also trading at a fair discount to the small ordinaries index as well, down by about 16%. So one that we followed for a while. It's been heading southwards pretty much ever since we've been talking about it, but certainly some of these new retail agreements look like that'll help them out, and one that to possibly pick up in that smaller cap space.
Okay, excellent. And we were talking before about NAB as well. Something going on with NAB?
Yes, NAB yesterday bringing out their 540-page odd information booklet.
Insomniac's dream.
Yes, regarding the sale of the UK business, the Clydesdale Bank.
Yeah.
Certainly at this stage the proposal is it's going to be actually a demerger, maybe a demerger of around about 70 to 80% of the business, and they'll look at floating or issuing an IPO for the remaining 20 to 30%. Again, at this stage, it's probably not going to have a major influence on the NAB share price or anything like that, but more information will come out as well. But
so nothing shareholders need to be doing at the moment?
Not at this stage. End of this year is looking like the time frame where that they're going to hopefully try and get it all tidied up. So it's been a long process. This UK business has been a real thorn in the side for NAB, but yeah, more positive steps to them getting it resolved and getting it off the book, so to speak.
And especially with the UK economy getting its act back together. Briefly, and in that similar sort of vein, where banks are trying to raise capital, Westpac, of course, wrote to all of their shareholders last week offering them the chance to buy some shares in BT. My personal view is thank you very much for the opportunity, but an $8 BT share, I'm probably not particularly interested. Are you of a similar view?
I don't think it's a core holding, maybe by any way, shape or form. I mean, BT's not a bad business, and I think the offer at $8.20 was a reasonable discount to the current price. I think it's about $8.70 at the moment. Yes, I think if you're going to look down that financial space, you may as well just stick to the banks, the big four.
Or a perpetual, like if you want particular fund managers. And the reason I'm a no, I mean, not that it's a bad business, but these companies are very cyclical, in particular BT, and I remember even 3 or 4 years ago it was $4 when everyone hated the share market. So if you want to buy those types of companies, you'd probably wait until a time where there's not so much love for the share market about. The reason I'm mentioning Perpetual at the moment, the earnings are going to be up by about 30% this year. It's about a 5% fully franked dividend. So if you're desperate to get into wealth management, Perpetual's probably the way to play it. Or, as we know, most of the big banks, 20% of their earnings comes from wealth management, as you were saying. But for Westpac shareholders, probably give the BT offer a bit of a miss. Anything else from you, Michael?
I think that's about covers it, Andrew. Again, the EU summit, well, the new EU summit, that'll be probably something to keep an eye on. We've got some employment figures out tomorrow, which are looking like we'll be pretty steady on that front. So I think that'll about see us through for the week.
Excellent. And I'm standing in for Dan this week. Dan has a bit of a medical issue he's dealing with at the moment, but he'll be back next week. Thank you.
Thank you.